Good morning or good afternoon, depending on where you are coming from. How's everybody doing? Hello, Brenda. Let me know you can hear me just fine. I unmuted the microphone. That always comes in handy. Let me get this thing going here. Hello, Stephanie. Hey, Bonnie. Hello, Helen. Oh, there's Will. I was like, where's all the guys? It's all ladies saying hi. What's up, Will? Awesome. Thanks, Brenda. Good. It's always fun when you mute yourself and then you do a recording for 30 or 45 minutes or an hour, and then you realize that the microphone itself was muted the entire time. So then it's like, I've done that a handful of times. So it's definitely frustrating. Yeah, happy Friday. Get to sleep in on Monday, huh? You don't have to get up to trade. That's right. Holiday weekend. I don't know if I'd say always will, but sometimes. Usually my frustration overcomes me. And it's like, then I'm mad. You should sleep in and relax. Go on a walk, go to the beach, have a drink. I know. I know. I was just firing back at you, Will. uh, yeah, if you're in that place where you're like, oh, the market's closed, this stinks. It's like, yeah, you haven't been trading very long then. Because after you do this for a couple of decades, almost 25 years now, it's like, okay, now I'm looking forward to the weekends. It's after a while you get into kind of your rhythm, if you will, and you get into your style of trading, it gets very repetitive. It literally becomes like a job like any other job. So which isn't a bad thing because it's just like anything else, right? If you have a job, there's still times and moments where there's exciting things happening, right? So it does get, I don't necessarily want to call it a grind because I think it's more fun than that. It's more exciting than that because a lot of jobs are just a grind. I know my brother hates his job. But he does it. So what are you gonna do? But yeah, I mean, trading like I said, once you get into your kind of pattern and the way you do things and your style of trading, once you figure that out and you're in that space, it's like anything else, right? You do your research, you find your candidates, you set up your trades, and then you let them do their thing. So it gets rather monotonous and it can get boring. And that's not a bad thing. Actually, that's a good thing. That's where you should want to be, is get to a place where you are bored. So, um, yard work and gardening. I'd rather, yeah, yard work. No, I weirdly started the last few years, started growing a little bit of stuff. I started with just some herbs, and now I've got a small little garden. I like to eat. That's all I care about. And it's nice to go have like fresh fruits or veggies. I had strawberries going and raspberries. My daughter wanted a raspberry, so we got a raspberry bush going. So, but let's get started. I am not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. Surprised you haven't asked about the cat yet, Brenda. She's here somewhere. She recently discovered Q-tips. So now she likes to play with them. I throw them for her and she plays fetch. So she might bring a Q-tip up here sometime in the next hour. But it's still early out here on the West Coast, so I'm on my third cup of coffee. But here's what's coming up in the next few weeks at Wealth Builders. We got the premium online workshops, Covered Call Explorer Foundational class. This should be with Tripp on the 24th. Is he here? No, he's not. Slacker. May 24th and the 31st at 8 p.m. Mastermind group is May 28th at 8 p.m. and June 4th, also 8 p.m. Almost everything's either 7 or 8 p.m. So, oh, that's a good idea, Will. I'm going to try that. It's a good trick. Trading You is May 30th and June 10th. I think I am up on May 30th, if I remember right. Inner Circle is June 3rd and June 10th at 7 for that one. Monster Market Movers, June 3rd at 8. And Power Option Plays is Monday and Thursday, the option candidate video. And then Cover Call Explorer with Trip on Thursdays, and E-mini Think Tank with Brandon Monday, Wednesday, and Thursday. So. Oh, really, Bonnie? Huh. I haven't had that problem, I don't think. I mean, it's only one bush, so it's not like there's a lot, but it's cranking right now. It's not putting any fruit out, but it's bushy and huge right now. So I'm hoping to get a lot of fruit this year. It's only about 3 years old, so I've heard they produce more and more over time, and it's in a big old pot. So that's what my daughter wanted that a few years ago, so I grabbed it for her, and so it's really weird. I never in a million years, if you'd asked me even 5 years ago, if I'd be growing my own food, I'd be like laughing at you, and it's like here I am. And I'll have, like I said, it's not a lot. It's just a little bit. So I'm just kind of playing around. So you can find us on all the social media platforms. Well, I might have to get up my BB gun then and shoot those birdies. At least scare them away. If we haven't met, oh, I just saw yours. Yeah. Q-tips on strings. If you're not familiar with me at all, I've got 3 different deals, right? Patterns in a Flash, which I think you've probably all seen. Hopefully you've all at least experienced it on at least for a quarter. That's a tool basically that trains you to recognize the patterns and know how to trade them. Essentially, Weekly Whispers is basically my research that I'm doing for myself for my own trades, and I just record it. You know what I think, what I see. I start off with a macro view, looking at just the big picture. What are the overall markets doing? What's the macro? What's the overall economy look like? Usually I'm digging into deeper into some of the data, the economic data that's coming out. And you'll find out very quickly that I am bearish because the economy is showing signs of cracking. There's still some signs. There's always signs of strength in certain areas, but the economy is definitely on edge as far as I'm concerned. So, which isn't a bad thing. It's not a bad thing at all. It is what it is. There's nothing we can do to control the larger economy. We can only control our own economy. So I don't, some people get all cranky and like, oh, you're so negative and so bad. Be optimistic. It's like, I can be optimistic because the reality is even in bad economies, and actually some of the biggest fortunes ever made in families were made in bad economies. So it's not a matter of being negative. It's a matter of being realistic and seeing what is there and what might be coming next. I mean, that is one of the core things we have to do as traders is learn to have vision and recognize what's going on and what might be coming next. That's what we do. That's one thing we're going to talk about with charts today, which is pretty much what we always talk about, is what we do is analyze the situation in the moment and project out and say, based on this information and historical data and how things have played out before in the past, I think the odds are this is what ABC is what's going to happen. And so I'm going to get in the way of that, get in front of that, and hopefully it works out the way I'm expecting it to. If it doesn't, I'm going to have protections in place just in case, right? If it doesn't, then I'm going to get out of there and wait for another opportunity. That's what we do, is we analyze things, we create a vision for what's coming next, and then act on it. And the one thing that is consistent in life is change. Yet we all naturally resist change. We don't want things to change. And we believe that things are always going to stay the way that they are. Right? I mean, for the last, year and a half, all these real estate agents and all these people that are heavy into real estate, they're like, oh, no, the prices aren't coming down. The valuations aren't coming down. Look at the inventory. Well, yeah, that's the inventory today. Right now, the inventory is low because a lot of people have 2% and 3% interest rates. And they don't want to move unless they absolutely have to. And they're not going to refi. So why would they ever do that? There's no sense to it, right? But yeah, inventory is low today. But what happens if inventory goes up? A lot of people don't even bother to ask the question. Like, what happens if the inventory spikes? What happens if people start to get laid off and lose their job and they can't pay their mortgage anymore and they go into foreclosure? What happens with all the people that are already in foreclosure? What happens when some of these COVID restrictions are still on? Some banks, there's some properties in some areas, I don't know where they are exactly, but there are some places that banks can't foreclose. People are behind and they should be able to foreclose on them, but they can't because of some of the COVID measures that are still in place. But those are starting to expire and go away. So now the banks are going to take their properties back. And in the last month or two, inventories in real estate have started to tick up. And in some places, they have actually ticked up quite a bit. In some places, they've spiked. Gone up a lot. there's only one of two ways this thing work out. Either interest rates have to come down to justify the prices, or the valuations, the prices have to come down to match the interest rate, because people buy based on what they can afford on a monthly basis. And I don't know where y'all are at, but where I'm at, if you're buying a starter house out here, they're $500,000, $600,000. You can get out in the sticks and get something for $350 maybe. But if you're anywhere near town, you're $500,000 easy. Which even, putting a decent down payment down, you're still looking at a $4,000 or $5,000 a month mortgage. Well, if you're making, if you're making 10 grand a month, your wife's making 10 grand a month, that's awesome. But what happens if one of you loses your job and you're maxed out, you don't have any savings, right? If you're living paycheck to paycheck on 20 grand, your mortgage is 5,000, that eats up more than half your paycheck with your take home paycheck. Now, all of a sudden it's like, you only have half the income. So it's definitely a sticky situation. There's going to be a lot of people. There's already people that are finding themselves in that position. And it's sad. It's unfortunate. It's not something I root for. I don't want people to be in that position. But the reality is that houses are too expensive for where interest rates are at. So again, one of them has to crack. One of them has to come down. Either valuations do or interest rates do. And hard to say. I mean, the Fed could cut rates. I don't think they're going to. I don't think they really, based on the data, they can't, because inflation has ticked back up. So the question is not, and here's where I'm going with this, it's not whether or not the economy is good or bad, or what direction it's headed, whether we're headed for a crash or whether we're going to continue to run. The question is, how do we as traders see it with our eyes wide open, know that change is coming, and position ourselves to take advantage of it? Because if a crash is coming, then I want to be in a place where if or when it crashes, then I'm capitalizing on it and then making profitable trades, right? Then my economy grows, even if other people's economy, which I can't control, even if theirs is crashing, at least mine's not, right? So I don't have any control over other people's economy. I can only control mine. So oh, really, Stephanie? That's funny. Yeah, I mean, a lot of people did, and I did too. And I tried to convince the, now ex-wife, to sell our house because we'd bought it in 05, and it was somewhere around 07, early 08. And I was like, it was up, we paid $250 for it. And it was valued at $3. The neighbors bought their house at $350, and ours was, they were very similar. Ours was a little tiny bit nicer, but we probably could have gotten $350 for it. I said, let's cash it out. Let's bank 80 grand, go rent a house for a year or two, wait for the market to correct, because I think it's going to, and then buy something with the cash we have. Oh, no. It's like, whatever. And 2 years later, we sold it for a $15,000 loss. We sold it for $235 2 years later. It dropped a full 40, 50%. So, is what it is. That's water under the bridge, though. Good question. I think so, Brenda. I don't see why it wouldn't be. Brenda asks, is it a full trading day? It's not a half a day, as far as I know. That, among many other things, Bonnie. Exactly. That is why she is the X. That is one of the more minor reasons, but we don't need to go there. that'll open a can of worms that we don't need to go through. So anyway, again, just to reiterate, the point is, being bearish is not a big deal. We got to be able to see what is coming and prepare for it and take advantage of it. That's what we do as traders. We embrace change and not reject it, which most people don't want change. They don't want things to change. They want them to stay the same, which is natural. That is the natural human place to be, right? Just like water, right? If you pour water down a creek or a crevice, what does it do? It finds the path of least resistance. That is our natural place to be. But as traders, we can't be complacent and just sit there and be like, oh, I'm just going to take the easy route. Because as you may have noticed, trading is not exactly easy. It is extraordinarily difficult. It's one of the most challenging things you will ever do. But let's get to the topic of the day. Trust. Do any of you have trust issues? Speaking of exes. That was a good segue, Bonnie. I like it. All right. That is good, Brenda. Good, good, good. It is good to acknowledge it and admit it. We all have trust issues to a certain degree. But one thing that trading requires is we have to learn to trust, right? Just like in relationships, marriages, whatever it is. I mean, you can really compare trading to just about anything in life. But it definitely requires trust. And you say, well, what exactly am I supposed to trust? That doesn't make a lot of sense. We're talking about trading here, right? Well, you got to trust in the charts, right? Well, what does that mean, trust in the charts? I know that's very vague. And well, when you start to understand technical analysis at a deeper level, which hopefully you all have, if you've been through patterns of Flash, then you most likely do, because everything in there, there's 6 or 8 hours of video in there. There's all the foundational stuff and the basics. And really, when you get down to it, it took me probably 10, 12, maybe 15 years to get to the point where all the riffraff stuff I was into, getting out of the weeds, I dumped it all and got back to just the basics. And the first thing is, what is the trend on the long-term, intermediate, short-term? Are we making higher highs, higher lows, or lower highs, lower lows, or are we stuck in a range? Or are we sideways? That's the first thing. What is the trend? And it's all, so what I'm looking for. It's a C word. It's in context. It's all within the context, right? If you look at a year-long thing, you might have one trend. If you look at 6 months, it might be a different trend. If you look at 3 weeks, you might have a downtrend. So you've got to put it in context, and everything in trading, especially when it comes to charting, is within context. But then you decide, okay, what in the time frame that you're looking at trading, what is the trend? You got higher highs and higher lows, lower highs, lower lows. Where is support? Where is resistance? Knowing that those things actually work and are effective for traders, knowing that support and resistance and trends and breakouts, knowing that those things work. Not every time. They're not 100% perfect, just like patterns, right? Like everything we talk about, none of it is 100% perfect. Just like people, right? I mean, I'm not perfect. I made a mistake once. But when you start to see it consistently do the same thing, right? When you start to see it recognize the trend line, like oil. Oil's been in this downtrend for 2 or 3 months now, I think. And just in the last week, there's a trend line I've got on oil, and it just tagged it in the last week, and it's been falling ever since. When you learn to trust in those support and resistance lines and trend lines, then all of a sudden you go, okay, when it works consistently, right? And it is. I mean, look at it as a relationship. You got a new relationship, you meet somebody new, you don't really know them. And then over time, as you get to know them and you start to see that they are trustworthy, right? They can be trusted because every time this happens, this is what they do. Every time this happens, this is what they do. Charting is no different, right? If a human proves to you that they are trustworthy and they will do the same thing consistently, they will stay in that trend, then you learn to trust them. I know it sounds a little weird, but that's what we have to do with regard to trading. We've got to learn to trust that the charts and the patterns and the support and the resistance. And, when this happens, here's probably what's going to happen next. And over time, you start to see that, right? Same thing with analysis. Especially when you're taking, there's charts and then we're analyzing the charts, but we're also analyzing the overall economy. We're analyzing data, economic data that comes in, like unemployment's low. Well, but why? And when you start to ask those questions of why, and you peel the onion back, and that's what a lot of people don't do, is a lot of people want to stay on the surface. Oh, unemployment's low. Or realtors. Oh, well, inventory's low. That's the surface level. Yeah, inventory's low now, but if we peel the onion back and you start to see some of the underlying layers there, then you start to see that, inventory might tick up. And if inventory does, then what happens? Right? We have to do the analysis, peel the onion back and try to get to the core and say, okay, here's what the surface looks like. But what's it really look like inside? What's the deeper issue there? And we got to learn to trust that analysis. And then, okay, here's what's really happening behind the scenes that most people don't see. If all you do is watch the mainstream media with regard to news, economic news, you only see what's on the surface because that's all they show. for the most part. I mean, there's occasionally somebody. I finally saw a guy on CBC. They had a guy that was pushing back on the AI thing. And he was sitting there. He goes, I think it's too early. He goes, AI looks spectacular, but he goes, I think a lot of these stocks are overdone. And that's what I've been thinking for a long time. I have yet to see anybody on any mainstream news source that was out saying AI is overhyped. And maybe it's not. I mean, I could be wrong. He could be wrong. Everybody else could be right. But I've thought almost since the beginning that it was overhyped, just like the .com, and that's what I compare it to. You know, I don't know how many of you were all trading back then. I'm assuming you probably all were around back then. But .com was this crazy time where we had, and it created a 4 or 5 year massive run in the market. So we could have a similar type of situation. But that's the way I see AI. It's not where it could be yet, and it's not where it will be at some point in the future. I think it's going to make dramatic changes in our lives, but it's just too early. And I think like I said, I think the runs in the stocks, the AI related stocks, are overblown. But that's my opinion. But that's what he was saying too. And it was kind of funny, actually, and that's why I remember it so well. It's not just because it was a confirmation bias. He was confirming what I already believe, right? Which you have to guard against, right? It's easy to get in that mode, and because you always look for somebody that agrees with you. It wasn't really that. It was the fact that the interviewers on CNBC were pushing back on him so hard, saying, well, yeah, but so-and-so said this, and so-and-so said this, and so-and-so said that. And it's like, why can't you guys just let him? It's like they were trying to convince him he was wrong. And these are nothing more than they're what do they call it? Oh, reporters. If you can even call them reporters. I don't even know if they're reporters. They're not even commentators. But they're like, I mean, it's like they're trying to convince him that he's wrong. Instead of just asking questions, let him answer. It's like they're just hammering him like, dude, you're wrong. Trying to tell him that he's wrong. And he's an idiot. He doesn't know what he's talking about. And like, wait a minute, isn't your job to let him have his opinion and share it with, that's why he's on, isn't he? That's why it stuck out to me, because it was kind of irritating. They were almost trying to bully him into changing his point of view. Excuse me. But yeah, it was crazy. That's the first time I've seen anybody come out and say, though, on at least on mainstream news sources, that AI is overblown. So, and again, maybe it's not. So, trust in the patterns, which is the headline of today, right? And that's essentially what we're going to do. Which, I mean, all this is kind of, it's intermingled, right? It's all correlated to each other. So, but see, and this is kind of the progression we have, right? First, you got to learn the basics of charting, right? Trends, support, resistance, role reversal, and you got to learn to trust that. Then you got to learn to trust in the analysis that you do, and recognize that the analysis is not the most important thing you're going to do. It is analysis. It's an opinion. It's a perspective. It is a projection, if you will. You call it a prediction. I mean, whatever you want to call it, doesn't really matter what word you put to it. You're essentially saying, I think this is what's going to happen next. Then you have to make a decision. Do I get in the way of that? Patterns are no different. Patterns are part of it, right? So you got to learn to trust in the patterns. And when you see the patterns play out on a regular basis, and again, they're not 100%. Sometimes they don't. We're going to look at some today. I'll show you one that didn't recently. Trust in the odds. And this is one thing it took me a while to figure out, was number one, the odds, because you don't have to be right that often to be profitable in trading, right? If you use a 3-to-1 risk-reward ratio or higher, then the odds are in your favor. You only have to be right, 1 out of 4, a little bit better than 1 out of 4 times. If you're 26, 28, 30% accurate at picking the direction, then you're just fine if you use risk-reward. But you've got to experience that and learn to trust it, right? And understand that you would just put on 4 trades. You got $3 of upside on all 4 of them. You got $1 of risk on each of them. If one of them goes and hits your target and the other 3 hit your stop, you lost $3 on, you lost $1 each on 3. So you lost $3. The other one hit the target and you made $3. So you lost $3, you made $3, you're break even. And obviously we're not here to break even, right? But you were only right once out of 4 times. You were 25% and you didn't lose any money. So if you can be 30% accurate And go run the numbers on it over time. You do the same thing over time at 30%, you come out ahead. This is numbers. It's just math. So once you implement that into your trading and you start to see it play out in real life, then you go, oh, yeah, I can just trust the odds. I don't have to worry about it. Trust in the process, right? And this is another thing that can be challenging. And this is challenging for everybody. Even I still have challenges with it. I still fight it every day. Trust in the process of here's what you do, right? Here's what we do as traders. And really, this is kind of a step-by-step. First of all, you're finding an opportunity, right? Look at the charts, which I use patterns. You got to find something, some kind of setup, something that says now is the time to get in. You got to analyze it, right? And then you got to look for a pattern, look for something that says, here's where I'm getting in. It's breaking out here, so I'm going to get in if it breaks out of this. You set up the odds, right? You set up your trading plan that has a 3-to-1 risk reward or better. Well, you just have to trust in the process, right? And the most important one, the most critical one, is that one right there. The rest of these mean absolutely nothing if you don't have the last one. How many of you have ever gotten into a trade and you set an alert instead of a hard stop? And you say, I'm just going to watch it. And if it hits my alert, then it hits your alert. And you're like, I need to stop. I said I was going to stop. I said I was going to stop out here, but let's give it one more day. Then the next day goes against you. One more day, one more day, one more day, one more day. All of a sudden, your option is worthless and you're toasted. What do you do now? You kick yourself, right? You're like, I can't believe how stupid I am. I'm such an idiot, which you got to fix that, right? You're human. Like I said, I made a mistake once too. That's a natural process of trading and learning the hard way. It's expensive. It is emotional. It's frustrating. It's aggravating. But you've got to be cautious of how you beat yourself up. Okay. And I still do. It's easy to do. That's the natural progression. That's the stream we want to follow, right? That's where the water goes. Oh, you're so stupid. You're such an idiot. Why did you do that? And it's still going to happen. I still do it sometimes. I just had one this morning. I pulled the trigger on a trade. I'm like, what was I thinking? And it's like, okay, I should have been more patient. And it's just, it's always like that, right? It's just the nature of the business. It's the nature of the game, if you will. You've got to learn to let go of the negativity that we build into our own minds. And it's hard to do. And maybe not necessarily let go of it, but correct it, right? When it pops up and it hits, then you've got to correct it and go, okay, I know I just called myself an idiot, but I'm not an idiot. I'm human. I just made a simple mistake, or I succumb to the emotion, or I succumb to this. Okay, lesson learned. Correct it. Now, next time when I'm feeling that way, I'm going to step back and count to 10 and think for a second and let it. And if I miss it, that's okay. Because that's usually what happens, right? You're like, oh, I'm going to miss it. I'm going to miss it. Boom, you hit the button. As soon as you hit the button, it turns over. Use those emotions, use those feelings as an indicator, because that happens to all of us. I don't do it very often anymore. It's very rare. And that's one of the things as traders that one of your goals should be to get to a place where you're making less mistakes. Not to be perfect, not to not make some mistakes. You're human. You're always going to make mistakes. But to make fewer and fewer mistakes. And when you do make the mistake, then you can correct it very quickly and easily. That's a good goal to get to. And that's really all we can do, because you're going to have those moments. You're human. You're going to talk bad to yourself. You're going to trash yourself for making a stupid decision. But then just correct it. That's all. Just don't stay in that place. You can be frustrated and angry at yourself for a minute, but you can't stay there. You got to get back to, okay, let me get back to this process, the way that I do things, right? But getting back to the trusting oneself, when you do that, right, you get into a trade, you do this, it goes against you, and then it expires worthless, or you take a massive loss, or whatever the case is. What happens the next time you go to pull the trigger on a trade? The very next trade you're doing, what do you do? What's going through your mind? You're like, remember last time when I said I was going to stop out? Well, yeah, you were an idiot. You didn't do that. You don't have the trust and faith in yourself, right? You're questioning and second guessing yourself. Are you really going to follow your plan? You had a plan last time and you didn't follow it because you're a moron, right? Now, I'm not saying this real, but this is the way we talk to ourselves, right? I know I do. Am I the only one here? So I'm not calling you all that. Understand, put it in context, right? It's okay, good. I didn't think I was alone here. And it's human nature, it really is. And that's where you've got to be able to give yourself grace and forgiveness and mercy and all these things that we all need, right? Because you're human. But you start to second guess yourself on the next trade and the next trade and the next. Every time you do it, every time you make a mistake, the next time you go to pull the trigger, you're like, am I really going to follow it? And that comes down to learning to trust yourself. And that is the most critical piece, is learning to trust yourself. You got to trust all the other things, but when it comes down to it, you got to be able to trust and go, okay, last time I didn't follow the plan, but this time I'm going to. And yeah, there's a good solution for that too, Stephanie. It's called scaling. She says, I'm overly cautious and cut profits too soon. So if you haven't scaled out before, then try that. I don't know if you have or not, but ask Will. He'll tell you. He's here. Because that's what happened, right? You get scared. Fear is taken. You say overly cautious, you're afraid. You're afraid that you're going to lose out on, because, well, here's the other thing. And this is the opposite of what I was just explaining, right? Where your stop is hit, you don't follow your plan, or you get into a trade and it goes your direction, right? And you're up $2,000, and then 2 days later it turns to reverses, and your $2,000 is now $1,000 loss. You're like, and now you're freaking out. Now you don't know what to do, and you just freeze like deer in the headlights, right? Because you were profitable. And then you're, why didn't I take my profit? Why didn't I get out? And you start to beat yourself up. Like, I should have taken my profit. And then the next time you get in a trade and you get up $2,000, your memory kicks in and you go, hey, idiot, remember last time you were in this position? Remember last time you got up $2,000 and you let your profit go bye-bye? So don't be stupid again and get out. Right, Stephanie? That's what you're doing. And so you get out, you're overly cautious, you're afraid that you're going to lose your profit that you have, so you exit the trade. And then what happens? Then Murphy shows up and the thing keeps going. And 3 days later, you're like, there's another $3,000 of profit I would have had. And now you're in the woulda, shoulda, coulda syndrome, which is deadly, right? So that is the opposite of the other one, where you're profitable and you cut your profits too soon because you're afraid of giving your profits back. So watch this, Steffi. I'll just give a simplified example, but say you get in that same situation. You get into a trade, you're up $2,000, and your fear kicks in. And you go, I don't want to give up my profit again like I did last time. What if you take half of it off the table? Say you have 10 contracts. You sell 5 of them. You not only have just banked $1,000 of profit, but you cut your position in half. So you have not only removed half of your risk exposure, you've got $1,000 of profit there, which actually reduces your risk by 60, 70%, depending on what the numbers are, right? So you're not just cutting your risk in half, you're cutting it more than in half. Now what happens if the thing backs up on you? I'm not that worried about it. Maybe you move the stop up to break even. So even if it pulls back to your spot where you're entered and you get out of the trade, break even, you still have $1,000 of profit. So you're still profitable. But what happens if it keeps going? You bank your 1,000, you still have 5. Now, if it keeps going, you're still making money. You're still making those profits and you haven't left money on the table. That's what I do. Yeah, move the stop. That's what I do, is move the stop up. And it's all based on what the chart is doing, right? If it's running hardcore and there's tons of volume and there's lots of momentum, then, well, and there's where, that's why I wanted to go with 50-50, right? If you take half the position out. But there's the beauty, and there's the challenge to trading, right? You've got 2 different things going on inside your mind, right? You got the little fear guy over here and the fear guy over here. And one is saying, hey, idiot, remember last time you had that $2,000 profit? and you didn't take it, get out, take your profit, take your profit. You can't go broke making a profit, which is a lie. You can. You take a whole bunch of $10 profits and you have a $3,000 loss, you're going broke. Sorry. But you have that little fear guy on your shoulder saying, take your profit, take your profit. The other guy is saying, yeah, but you might leave some money on the table. Don't leave your money on the table. So how do you solve that? How do you fix these two guys jamming each other in your ears, telling you one thing that are opposing each other? You scale out. You take part of the profit off the table. Now, let me throw a little, since that concept hopefully is landed, let me throw a little tweak on it. A little advanced, if you will. We'll take it to the next step. I take out the parts of my trade based on what the stock is doing. Like I was just saying, if there's a lot of momentum, if it's moving fast and moving hard, and there's lots of volume, and it's pushing hard in your direction, whether it's up or down, then I might only take 20% of it off the table. Maybe I'll just take a small profit, take 2 contracts instead of 5. If I look at it, it runs up pretty good and I've got a decent profit, and I go, there's some indications of weakness, or I'm thinking maybe this is my analysis says this move is not that solid, it's not that strong, I might take 60% or 80% off the table and then adjust the stop on the rest of it. So it's all based on the analysis, right? It's going back to trusting your analysis and looking at the chart and saying, based on what's going on right now, what is the best move? And the best move is, how do I reduce my risk based on my analysis? Here's my analysis. I think it's going to keep running like hardcore. Okay, I'm not going to take anything off the table. I'm willing to leave the whole thing on the table because it's running so fast and so hard. Let it go. But if that fear starts to crop in, it's okay. How do I resolve this fear? How do I get myself to a place where I am confident and comfortable in this position that I'm still going to turn a profit? That makes sense? So it's always a matter of getting yourself to a level where you're comfortable with the amount of risk that you're taking. That should always be the question you ask before anytime you pull the trigger on a trade. You know what your risk is. You know how much you could lose on the trade. And you say, okay, am I comfortable with this amount of risk? I could lose $1,000 on this trade if it goes and hits my stop, knowing in the back of your mind that if it gaps, you might lose 3. Am I comfortable with $1,000 of risk, knowing also that it could cost me 3? And if you can't answer that question, yes, then you shouldn't be doing the trade. I can't tell you how many times, not only have I done it, but I've seen traders over the years that they're freaking out about their trades because they open up a $30,000 account and they put $20,000 into one trade. It's like, what are you doing? And they're freaking out because they could lose $6,000, $7,000, which represents 20 or 30% of their account. You lose 20 or 30% of your account, that's hard to make back. You lose 5%, 10%, that can be overcome without a whole lot of effort, right? I mean, it's not crazy. Oh yeah, it would blow your mind, the stories I've heard from people. A guy years ago, I can see his face. I'm trying to remember his name. I wouldn't mention it anyway. Yeah, he started with 30 grand. And in 3 months, he turned it into 300,000 because he literally put the whole account into one trade. And it was something that a big momentum play that everybody else was getting on. And, that 30,000 turned into like 90 grand on his first trade. And then he did that a few more times and got lucky. It's a crazy raging bull market when even monkeys are making money, right? And, in 2 or 3 months, he's got $300,000. He's like, this is easy. I'm getting filthy rich. Like, woo. And then just a couple years later, he's back at a workshop and he's like, well, I can't remember who he's talking to, but I remember standing listening and I was just, I had to be careful not to let my face show because I was just in my mind going, because he's telling a story about how his friend got in this position. My friend's a trader. He got in this position and he did this, and now the position's here and he's underwater. He's getting crushed. He did this. And I remember the other guy's like, let's get real. That wasn't really your friend, right? Was it? That was you. Yeah, that was me. He's trying to not admit that he screwed up in a big way, but I mean, he gave all his money back. He lost it all and then some, which is normal. But the key to this business is managing your risk well. Forget about making tons of money. I mean, yeah, that's obviously the goal, but at the same time, if you don't manage your risk well, then that's the kind of scenario you have. You throw a ton of risk out there, and if it hits and it hits right, and you're highly leveraged, you make a boatload really fast. But leverage is a double-edged sword. And so you give it back just as fast, if not faster. Most people give it back even faster. All you have to do is go into a casino for an hour or two and you watch that. Some people will hit something big and they give all their money back to the casino and then some. Because they're after that high of wanting to hit big and go, oh. So try it on your next trade, Stephanie. Try scaling out. Look at the chart, analyze it, and say, okay, I'm profitable. I'm here. Normally, I would pull the whole thing out, but do I think it's going to keep running hardcore? If I do, let me just take 2 out. And then watch how your emotions change in the trade. The second you pull that part of the trade out, you're just going to chill out. You'll be like, cool. Now, I don't even care now. I was up $2,000. I just banked $400. I reduced my risk by 25, 30%. I'm going to pull my stop up to this point. You can even leave it a little bit below where it's at. You adjust your stop up to where it makes sense on the chart and where you're comfortable with your risk. And now you can just be like, okay, even if it backs up on me and it hits my stop, I'm not going to lose any money. I'm going to be about break even. And now you can just let the rest of it do its thing. And you can just relax. That's when trading becomes more fun because you're not stressed and anxious and freaking out about what happens if this happens, if this happens. I don't care what happens. Because if it stops me out, so what? I didn't lose anything. But if it keeps running, that little $2,000 I had could be $4,000 or $5,000 or $6,000 or $10,000. And if it really takes off, then great. I'm getting a home run out of it. Because you never know when the home run's coming. And we've all experienced it, right? If you've been trading for a decent amount of time, you get into a trade and you get out too early, and then it takes off. And you would have had a home run, but you weren't in anymore. It's like, well, if you scale, then that opportunity is there. They don't happen often anyway, where you get these massive, huge home runs, right? I mean, you're getting, 1 out of 100 trades, maybe you get a massive, huge home run, 2, 3, 4, 500% return. But at least when you get to a place where you scale, then you're in that place. And sure, you may not, and there's what you're going to do, right? You had 10 contracts, you scaled out of 2, and then you got rid of 2 more, and then you got rid of 3 more, and you've only got 2 contracts left when it takes off, and you're like, I wish I had all 10. Of course you do. But you know what? If you're managing your risk and you're managing your trade, that is how you get more consistent over time. Swinging for the fences every single time, those batters, they have a huge strikeout ratio because they're always swinging for the fence. The ones like Ichiro from years ago from Seattle, I remember watching him a couple of times. He wasn't a home run hitter, but he was very consistent. He was just going for the singles and doubles. And occasionally he hit a home run. But it's one of those things. The question is, what do you want to be? Do you want to hit home runs? Do you want to have this wild, crazy swings in your account? Or do you want to be that more consistent batter where you're just getting singles and doubles consistently? And then occasionally you get a home run. So, but yeah, that's what most people want. It's consistent. That's what everybody wants. I mean, I don't know anybody that doesn't. I mean, home runs are nice, but I'd rather have the singles and doubles consistently over and over and over again. Yeah, see, Will just confirmed that. It makes me breathe so much easier by scaling out. And Will started using 3-to-1 and scaling, I don't know, 3-4 years ago, probably. And he'll tell you himself that it changed the way he trades in his anxiety. I hate calling it anxiety, but the anxiety level, right? When you have nervousness and stress and you're freaking out, then that's not a good place to be. The one thing you want to do is learn to manage your stress and anxiety, and scaling is a great way to do that because now you don't have to worry about things. You can let things play out and give it more time to play out and hopefully get a bigger hit out of it, right? Yeah. See, Will's a good what's the word? He started doing it immediately. And I've talked about it constantly in here. And I bet the vast majority of people haven't implemented it, which I understand because when I first learned risk reward, I didn't implement it because I just saw it as it's a concept, right? And then when I realized what it could do for my trading, and then once I started doing it, and that's what I had was that aha moment. Because I used to think that I had good plans, good trading plans. And then once I started implementing risk reward, I go, wait a minute. And so I had a handful of trades over here that I had on, And then okay, I'm going to implement this risk reward thing. So I put on these new trades. I remember putting 4 on. And I remember thinking, just like I said earlier, I don't care what these trades over here do. These ones over here, I was nervous and anxious about. Yeah, I had stops and I had this and that, but I didn't really have, looking back, I was winging it. I thought I had a good plan, but I really wasn't. Then all of a sudden I have these 4 trades over here. And I remember thinking, I don't care what happens with those. I'm not concerned about those, because if one of them works out in my favor or 2 of them work out in my favor, all I need is one of them to work out. And if the other 3 go against me, that's okay. I don't care. I was literally, I can't say I was unemotional about it, but I wasn't nervous. I wasn't, and all of a sudden this huge contrast appeared to me right in front of my eyes. I'm like, I'm anxious about these trades. I'm not anxious about these ones. Because I know that if one of them goes in my favor, I'll be okay. If 2 of them goes, I'm golden. All I need to do is 50-50, and I'm golden. That's when I started to realize the power of using that risk reward and not having to be right very often to control and manage my emotions, the anxiety level that I have with regard to trades. And that's when I started doing that consistently. And now I won't trade without it. And then I started scaling after that. It took, I don't know, probably a couple of years later, started to see scaling, started to do that. And scaling in is spectacular too. You'll realize that once you try. Scale into a trade. Because a lot of you have that, it's the same thing. If you flip that coin over that we're talking about, you get up $2,000 and you're afraid. Well, you look at a trade, you go, well, if I buy 10 contracts, I could lose $3,000. I don't want to lose $3,000. Well, are you comfortable with 300? Could you handle giving this trade $300 to find out if you can make 900? Yeah. Okay, then do 1 contract. And you know what? If it continues to move in your favor, then you can add to it. Or if there's a big range and there's potential for it to move big, then maybe I'll nibble on it here before the original entry point, because then I have less risk. That's what I was just thinking, Brenda. Because so I can show that what I was just explaining, I want to show on the chart. But before we do that, I'm going to make one final point, because this is the most important thing. When it comes to trusting oneself, it's important to understand just exactly how valuable that is. When you get into a trade, if you don't put a hard stop in and it gets to your stop, because you've probably all been there. If you haven't been trading long, which is fine. You'll get there eventually. Excuse me. When it gets to your place, you're supposed to stop out. And you justify staying in. One more day. It'll come back. Stop looking at the money that you're losing and what you're going to lose. And recognize that the damage that you're going to do to yourself, to your trusting yourself, by not getting out of that trade is going to be far more costly than whatever amount of money you're losing on that one trade. There's a cost to everything. And when you do something that you shouldn't do, when you break your own plan and you destroy trust with yourself, that's expensive. And the more you do it, the deeper that spiral continues to go. So I don't care how much money you're going to lose on the trade, follow your plan. That will help you develop trust in yourself to follow your plan and make sure that you're doing what you need to be doing. And once you develop that trust in yourself, that's when the game starts to change. Because now you're going, okay, I can create a good solid plan and just let it play out. And if you're if you're following your plans and you're using risk reward properly and you're scaling well and all that, then the odds are on your side. And you're managing your risk. The main thing is to manage your risk. If you manage your risk and you keep your risk minimal, then profits will come naturally. But you've got to get yourself to a place where you trust yourself to follow those plans. Right? Oh, awesome, Jennifer. Never said I love baseball season. Think about getting on base, swinging, or just trying hopefully in the square box. Related to trading, I use baseball all the time as an analogy because batting is so closely relatable. I mean, you can do a lot of things, right? I use poker a lot too, but oops, that's not what I wanted. Where'd my charts go? There we go. Yeah, well, this is the happier I am, the more I trade. The more I trade, the more money I make. Scale in on trades on and scalps. Yeah. Yeah. It'll, if you haven't scaled, then go use it. Go try it and just see. Do it on paper trades. I mean, even though paper trades, you don't have the full emotion into it, but do it and just watch how things play out. And try it with real money. That's the only way to really truly experience it, is to do it with real money and funds and see and watch your emotions just deflate. And you're like, okay, cool. I'm not worried about this anymore. You've got yourself in a position where I have no risk or very little risk. And whatever it does now is just gravy. So, well, here's the thing. Okay. So here's what right now, DXCM. This is the kind of a miniature Head and Shoulders, double top, if you will, but it's more of a Head and Shoulders broke down. And talking about trusting the patterns. And that's what I've got a few patterns here that we've looked at, and it's easier to see. This is not a pretty Head and Shoulders. It's a little bit small that I like, and it's kind of wonky, but the concept is there, right? Where the bulls are in control. You got higher highs, higher lows. The bulls make a new high, and then they fail to make a new high, and then it breaks down, cracks the neckline, and the expectation is going to go lower. This is what we're looking for on DXCM. It has yet to close above that stop, which is good. It got close. I didn't put a hard stop on this, which was kind of good because it would have hit there. Right now, it's about break even. So, and if it gets down here, and that's one of the reasons that I started putting these. I used to just use the 3-to-1, right? This tool, what is it called again? The advanced risk reward tool. It allows me to set up risk reward, and I had it with just 3-to-1, right? So this green line would have been 3-to-1 risk reward. I added this is 1-to-1, 2-to-1, and 4-to-1. So now I can see visually where different levels are at. My target is here, right? I'm always looking for at least 3-to-1. So that's what I've got here. So putting the stop slightly above the neckline, which is here, and it tapped it intraday a few times, but then it rolled back over. If it hits 45, or if it hits this 1-to-1, I might take part of it out. A lot of it's going to depend on, what it looks like. If it does one of these days, I'll probably leave it. But, oh, here, you know what? I'll get to CRM, Brenda. Whoops. Here's a great reason to scale, Jennifer, or the Stephanie too. So there's Target, right? Ugly, ugly Head and Shoulders, really wonky. I don't love it, but there's some really nice AEM or AEO, American Eagle Outfitters, is in a beautiful Head and Shoulders right now. If you all want to go look at that, but here's a wonky one, right? And this was the trading plan I had in place. It broke and it cracked. Triggered the entry down here, which is 429. And knowing earnings was coming up in a couple of weeks, and it dropped off. And I think it was this day right here. It was one of those 2 days. I pulled a little bit out of the trade. I took some off the table, like I think 20% or something like that. And then it rallied back up. I was like, oh, and what you could do is get back into the trade, right? In this case, I decided not to because I knew earnings was just a week or two away. But here's what ended up working out beautifully is that the day right there on that line, which was the day we had to be out for earnings because the next day was earnings, as you can see what happened. Let me zoom way in here. So I didn't reload it here because I knew earnings was coming, which looking back, obviously I wish I would have. But on this day, we're still up, right? The entry is 160, 164. So that was our cost basis. It's down here at 155 and change, 156. Earnings is the next day. Had 4 contracts left on it. Looked at the numbers, went, okay, if I take 3 of these out, I'm going to have $1,800 of profit. If I leave one there, right, and it's puts, right? If I leave one there and earnings is bad, then I could get a home run out of it. So the question then becomes, if I take $1,800 of profit out and I have 1 contract left, that means I would have to lose $18 on the rest of it, right? It would have to gap way up here to 175, 180 in order to lose money on it. Am I comfortable with that risk? Am I comfortable with earnings coming out and probably gapping down, possibly gapping up? If it does, it's got to get way up here. And the answer was, yeah, I've already banked a healthy profit. The odds of me taking a loss on this are very minimal. They're pretty close to 0, maybe 5%, but I'm willing to take that risk. And then ultimately, I mean, the next day it gaps down $15. That adds $15 of profit to the position almost. Not quite 15, it's 13 or something. That's what scaling can do. And especially when you're in earnings season. This is what I call the grand slam trade. Where if you can get into a position ahead of earnings, maybe a few weeks, even a few days possibly, if it moves enough where you can take enough of the position out and get your original capital back and hopefully a profit to where you have zero risk left on the table, and then earnings hits and it goes the direction you want it to, like then you get a big gap. Now you just went from hitting a single or double to now you get a grand slam, right? You got a massive win. So it's an idea, something you may want to look at doing down the road, but it's also, it illustrates what scaling can do, right? You take part of the position out, leave the rest of it there. And if you have no original risk left, then you're comfortable. I didn't care what happened with earnings. I didn't expect it would gap up to 180. It could have. Walmart did, but this one did not. So FTI, here's one. Getting back to the patterns, right? Trust the patterns, right? Here's a symmetrical triangle. And it actually broke up. Let me get in closer there. It broke up and hit the entry point here just a few days ago. And then came down and it ticked the stop out by 2 pennies, I think. Yeah, see, the stop was at 26.22, the low of this day. I had a hard stop on this one. And it hit 26.20. It ticked it out by 2 pennies. And then by the end of the day, it rallied back up. And I was like, if this thing takes off tomorrow to the upside, I'm going to be so cranky. And then guess what happens? Boom, it takes off to the downside. So I'm like, whew. You'll have that, right? Where you get stopped out of something and then it turns around almost immediately and you're like, I can't believe it. And then 2 or 3 days later or the next day, you go, okay, I'm glad I'm out of there. I'm happy. You got to remember those too. You remember the ones you miss, but don't forget about the ones that you were upset about, you're cranky about, but actually turned out it was good that you were out of the way, right? Alcoa, this is one that I get cranky about that I missed. This is one just last week and a half. And speaking of trusting the patterns, we had kind of back here, we had a little flag pattern. I also missed this move, which Alcoa is my favorite. That's why I'm cranky. It's one that I watch all the time because it's extremely volatile. It's extremely liquid. There's tons of open interest on it. The spreads are small. The options are not crazy expensive. And it moves big percentage-wise. I mean, look at this. It's 38.30. It just ran $5, almost $6. They ran $6 on a $38 entry. That's 16, 18%, something like that in a week and a half. But there's another, we had kind of a flag little pattern here. And again, it did it again. Nice little kind of flagpole. It went sideways for a while. I stopped watching it. That was the part of the problem. I stopped paying attention to it when I should have had an alert on there. I kicked myself because sometimes I just, you fall asleep with the switch. Called being human. And then it takes off and breaks through the entry point. It's like, by that time, it's like, way too far. And of course, now in hindsight, we could have gotten on it, but how do you know that? How many times does a breakout just like this? You got a big breakout for 2 days and it goes sideways for a month. It could have done the same thing here. It didn't, but it could have, right? But this is where trusting the patterns comes in. You've got the pattern itself is nice and handy and should have had a stop up there. Intel, this is one that I did catch. Head and shoulders, right? Trusting the pattern, left shoulder, head, right shoulder, breaks the neckline. The entry point's there at 41.34. And I don't know why it keeps doing that. This is one I actually exited too early. Had it, and this is the stop, right? If I have a dash dot like that, that's where I adjusted the stop. I don't remember where I got into this thing. I think it was that day. Wherever it was, I don't remember. I was in it. It's moving lower. It hit the target. I know I took some out on that day. And I think it was the next day I moved the stop to that level. And I can't remember exactly where it was. I got out of a little bit more of it here as it fell. And then I got out all of it here on this day. I think I'd pulled the stop down pretty tight. I got out this day. And then, of course, the next day it gaps down. It's like, and you're kicking yourself, right? Because you got stopped out of everything. Even though I peeled it out in, I think, 2 or 3 pieces as it fell. And then got the stop pretty. Once you see a fall like this, I'm getting the stop pretty tight because you don't want to give back a ton of your profit. And moves like this are going to happen at some point. So, and then it gaps like this. It's like, and it's going to happen. It's just the nature of the beast. Every single day you run into this. You're going to get frustrated every single day because you left profit on the table. That's where managing the mind is the most important part. Here's another one, Las Vegas Sands. This one was back here. Another head and shoulders. Again, a beautiful move. It moved all the way to the target. So it's a matter of once you see them and once you actually experience trading them, you see the pattern, you recognize it, and you trade it the way the pattern's supposed to go, and it happens. That's when you start to develop trust, right? I've been doing this nearly 25 years now. And when you see stuff like this, and it just plays out beautifully. Now, again, they're not 100%. Just like FTI. FTI didn't play out 100%. Sometimes you miss them. You're going to have patterns that are nice and you don't get into it for whatever reason. But I caught Las Vegas, and this was I don't remember what the rate of return was. It was 180, 200%, something like that. Intel was well over 100%. That was more than a double. It doesn't take too many of these doubles. You miss Alcoa. Okay, I didn't lose anything on it. You lose a little bit on FTI. In other words, it's just a matter of trusting that some are going to work, some are not. But the ones that work, when they do, and you make 100, 200, 300%, those make up for these little tiny losers here. This is a 20 or 30% loss here. I can take 4 or 5 of those and get a 200% hitter on another one, and I'm golden. Right? Yes, Jennifer. You can still be cranky. She says, I have to learn to be happy for the small wins I have instead of missing out. True. Yeah, it's a matter of you just got to learn to manage your mind and not. You're going to get frustrated and cranky that you miss out. I do every single day. I miss out on trades almost every single day. You miss something for whatever reason. You're sleeping the switch, or maybe you didn't see it. It wasn't on your radar until it moved, right? You're going to miss stuff all the time. It is the nature of the business, and you've got to wrap your brain around that and accept that as truth. It's just going to happen. And it's going to happen a lot. The more actively you trade, the more it's going to happen. And it's hard, it's frustrating, it's aggravating, but you also got to remember the ones that you do get, the ones you do hit. Just like this, right? I mean, I missed out on Alcoa, which was frustrating and aggravating, but I also caught Intel and I caught Las Vegas Sands. And so it's a matter of perspective and what you focus on. It's kind of like my pastor was saying I think it was last week. He's on this series about it's time to be happy again. It's like, if all you do is focus on what you missed or what you don't have, then you're going to be miserable. But if you focus on what you do have and you appreciate it, then it's just a perspective shift. That's all it is. Nothing below the surface is different. It's just how you frame it in your own mind. It's just your own perspective. And so it's okay to be frustrated and cranky and angry that you missed Alcoa or I missed Alcoa. But you also got to recognize and acknowledge that I also had a couple of huge wins on these two trades. I had a little loss on this one. Okay, so what? I missed this one. Okay, this one right now is working out in my favor. Actually, it's about break even on that. EOG, this one is working out beautifully right now. Right? So I've got one that I'm break even on, one that I missed, one that I'm in right now that is super profitable. Actually, I need to move that. I'm going to move this stop down. Actually, I'll probably put it just above the high of the day. I'll have to go adjust that here after we're done. And actually, I already scaled out a part of this. I did this day, going back to your scaling thing that I was talking about. It was Jennifer Stephanie. So this day right here, I took out, there was 6 of these, 6 contracts. I took one out right here. I said, if it hits that 126.33, take one out. That's 18% of the position, right? I still have 5 left. Well, actually, I don't know if I'll put an order down here. I might just take it out right now. Maybe I'll take one more out. I take one more out right here. I still have 4 left. If I take one more out here, I still have 3 left. And then if it gets here, then I'll put the trailer. I'll just keep moving the trailer down on the whole thing. If it turns around and goes back, okay, fine. I'm profitable no matter what on this thing. So, and then I'm just going to let it go, let it do its thing, let it run. So, yeah, I've got that one's working out. DXCM is that. I got some other ones that are upside down, and they're not fun, but you just manage them, right? So yeah, it's all about your perspective. Okay, Brenda, I'm going to give you CRM real quick. I just realized I forgot to go back to that. There's a lot of head and shoulders showing up right now. In fact, the market itself is slowly starting to build a little bit of a head and shoulders pattern. We'll do a quick analysis on CRM. Holy cow, look at that big broadening pattern. Yeah, I'm not, there's not really any super clean, great. That's a pretty solid. Well, round number 250, there's a surprise. You know, there's some, that 272 area is pretty solid support. Yeah, that should be today's candle. Today's 24th. Yeah, so that's today's candle. There's about a 15-minute delay. Holy cow, we're already 5 after. Whoa, okay. I lost track of time. I didn't think we were, I thought we still had about 3 or 4 minutes left. So yeah, it looks like if it breaks these lows, my expectation would be to go to 250 on CRM. That's what it looks like it wants to do. I don't know if they have, these earnings bubbles have been off on this for some reason. So make sure you double check earnings, make sure that's not right. A lot of these have shown up. I think CRM already has had earnings, right? I think I have that on my list over here. Oh, maybe not. 529 after. So I can't stand that. So there's earnings. That's the day you have to be out. It's coming out on that vertical line I just put on. That's the day that, oh, that's actually right. The earnings bubble is right on that. So yeah, you only have a couple days left on this. So that's crazy. You talk about the risk reward. I'll give you a risk reward, but I wouldn't be trading this myself because of earnings, because this one has some potential to have some seriously crazy move. Yeah, even it's kind of a tight range. I mean, it's 20 points on a $270 stock is not much. That's only 7%. I guess that's not bad, but yeah, the earnings thing would kill it for me. I wouldn't trade this because of that. But because yeah, you never know what this is going to do. And it's been very sporadic. You got some of the tech stocks have gone crazy. Like, I mean, Nvidia, Walmart actually kicked butt. Target came out and got crushed. So it's a stock picker's market right now. Yeah, CRM, I'd be waiting for earnings. Apple, there's one. Ooh, it's up a bunch. Yeah, I do have that on my chart. I saw that it gapped up this morning. It's rallied, but it's starting to get a little bit weak. I was looking, Apple's kind of stuck in the middle of this range. Here's where it gets interesting. Now, you don't see much there, right? Go to weekly, hit W. What do you see now? A big giant head and shoulders, right? Left shoulder, head, right shoulder. It's not huge. The head is just barely poking above the left shoulder. But if it rolls over from here and comes back down to here and it breaks that 165, which it could be weeks, possibly even months before it does that. So this is not something that's probably going to present right away. But if we break there, I think we're coming down here to about 130, but that remains to be seen. We'll just have to wait and see. But look at it on a short-term trade for Apple. If it breaks this level, you know, we had the previous high. We came down and tapped it yesterday, gapped up. If it rolls back over, and I drew all this stuff from yesterday, not with this candle, today's candle on here. So right now, I wouldn't do anything on it myself. But if you see something different than I do, we all see things differently, right? You may have a different analysis. You might see it as bullish. And actually, if it breaks this high, I can see it running back up to here possibly. But this is kind of in the middle of nowhere at this point. I would look at a short-term trade if it broke here to the downside. Otherwise, I'm just going to leave this alone and just sit and watch it and see what happens. So I am fresh out of time. I'm way out of time, actually. I'm way over. So I would, Brenda, but I just can't. I got to cut it off and say goodbye for now. So I actually was planning on being done early today, but we all got some good topics. So hopefully it's been fun for you and you picked up a little nugget here or there. That's all it's about, picking up little nuggets here and there and shifting and adjusting your plans so that you come out and reduce your risk and manage your trades well. So, all right, y'all too, to all the veterans out there, thank you for your service, Memorial Day, and all those have given and sacrificed whatever they have. So I appreciate y'all. So y'all have a great weekend and we'll see you probably very soon. God bless. Bye-bye.